this is Peter Leach, Senior Editor of the Journal of Commerce. I'm at AMA Capital Partners in their offices high atop the Chrysler Building in New York, and I'm sitting with Peter Shaerf, who's a managing partner of AMA Capital Partners. Peter, I wonder if you could tell us what the general state of ship financing of container ships is these days.
Peter, I think ship finance generally has gone through a pretty rough period, certainly after the Lehman crisis. I think that the amount of banks that were doing ship financing pulled out dramatically. So we've gone from pretty bad, slowly improving. I think the market is more available than it has been in recent months in the last year, but nowhere near as liquid as it was back in sort of 08 and 09 before the financial crisis.
So it's still a little tight then?
Yeah, I mean, I think it's a very relationship-driven business. The banks are not easily writing new business. The loan-to-value ratios are still very tight. Certainly on new buildings, I think you'd be surprised to see banks going over 70%, where in the past they may have well exceeded that. So yes, it's tight. It's not as tight as it was, and but it is nowhere near as loose or as liquid as it was back in sort of 06, 07.
If it's a little tight, why are we seeing so many huge new ship orders? And we talk about, you've got Maersk, you've got Neptune Orient Lines, you've got Double O, you've got Hanjin.
Yes, and the list continues, and Dallas will do this interview again in a year's time, and the list will have continued and grown even more. I think there are probably 2, 3, 4 reasons. I cite what I think are the main ones. I think the first one is price. You're seeing new building availability from shipyards at prices that are probably 30 to 35% below the highs of 08, the last time large ships were ordered. So a 10,000 TEU ship is now sort of able to be delivered for around $10,000 a slot, so about $100 million. Whereas back in 08, that last time that was ordered would have been about 130, 135 million. So that is significant. I think the second reason flowing on from that is after the Lehman crisis, I mean from sort of mid-08 to sort of end 2010, no ships were ordered. No container ships were ordered at all. So you've had this huge gap in the ongoing stream of vessels. And I think that is sort of part of the reason for the new ordering. And then thirdly, with slow steaming sort of taking vogue and sort of becoming the norm, I think and the environmental impact and the desire of shippers to have a more environmental friendly ocean-going carrier relationship, I think you are seeing an improved designs from the yard. I know C-SPAN, who I serve as deputy chairman, we've worked on a very sophisticated new design, our Saver class, which is a 10,000 TEU vessel with improved economics on speed and consumption, far better sort of carbon emissions ratios. And again, you're seeing it with Maersk, who are very proud of the 18,000 TEUs, where they're up to 20 ships of the Triple E class, with very strong sort of improved environmental friendly ships. So I think those are the 3 reasons, and I think there are obviously going to be more and more. I think we're, dare I say it, a lemming industry, where one goes, the others go. And plus the alliances themselves, so if one of your partners is sort of suddenly moving to upgrading to 10,000 TEU ships, you sort of need to keep pace with the partners. And we're seeing more and more of that.
Well, now, don't we run the danger of overcapacity? We're certainly seeing that on the Asia-Europe route this year, where
we are certainly this year as sort of rates have come down, and I think we went from sort of, we went from the worst to the best, right? I mean, I think 2009 was one of the worst years in the history of the industry, and yet 2010 was one of the best. So you saw companies like CMA work their way out of significant financial difficulty, yes, with some restructuring with the banks, but almost anything bolstered on the back of phenomenal sort of returns and sort of improved performance. And they went from sort of loss-making positions to generating $2 billion of sort of earnings just from the normal operation of vessels. So, business has improved in 2010. I think there is an expectation, Maersk have said that if, you get normal, steady growth on Asia-Europe trades, what they've ordered will not be enough.
Do you expect to see more ordering?
Next year, yeah. I think this trend will continue. I think you may see a little bit of a pause now, a slower stream over the next 3 or 4 months as the sort of market intellectually absorbs what's being ordered. I think the Maersk order is somewhat of a shock to the system, 20 ships at 18,000 TEU. But once that sort of mentally has been absorbed, I think you will continue to see the lines that have not ordered, either ordering or using third-party ordering, C-SPAN, some of the other, publicly listed owners. So yes, I think it will continue at least through another year, as long as the pricing advantage is there from the shipyards.
And is the money there to finance the ships?
Always a good question, right? I mean, I think it sort of hurt some of the KGs in the past. I think now the ordering is coming from responsible parties where they know they can play it. I mean, C-SPAN, for example, again, has done this $900 million venture with Carlyle, providing significant equity. CMA raised almost $1 billion in bonds, as did Hapag-Lloyd. Maersk will fund off their balance sheet. So, I think, and there are other public companies who've come to market, Costamare, Danaos. Danaos has been around for a while. Diana Containership's a spin-off from Diana Shipping. So, is the market, is the money there? Yeah, I think so.